Explain to me where you're seeing some signs of life in the office area.
Look, we continue to put points on the board. Great earnings driven by strong leasing and observatory performance. By the way, our observatory is TripAdvisor's #1 attraction in the United States for the second year in a row. We've leased over 500,000 square feet in the first half of 2023, 8 consecutive quarters of positive marks on Manhattan office new leases. And we're really firing on all cylinders.
Who are some of these companies? And listen, they have a lot to pick from. Robert Frank has tallied it up for us. You know, there's the equivalent of 40 Empire State Buildings or whatever it is of empty office space in New York. What are you doing to bring people in? Are you having to cut rates or anything like that? And what are the types of clients signing up right now?
No, again, as I said, just under 15% positive marks on Manhattan office new leases in the second quarter. And people have come to us because it's a flight to quality, includes our buildings with their accessible pricing. We're modernized, amenitized, energy efficient, with indoor environmental quality at great locations. And tenants and brokers want to go to landlords who have a great balance sheet. We've got the lowest debt to EBITDA of our New York City peers, no floating rate debt, no material maturity until 2025. All of these are competitive factors which really put us in the driver's seat.
It's incredible to see your Manhattan office vacancy rates up near 90%. You know, I think it's Vornado who's doing the big Penn Station project, you know, putting a ton of capital and really betting big on this idea that you have to be located near a transit hub if you really want to attract workers for the next decade, really. Do you think that they're right about that?
Yeah, well, first of all, keep in mind that we reflected our measurements all of our portfolio, not properties that are under redevelopment excluded. So that's part one. Part two, location really, really matters. And part three, our leasing percentage is up to 91.6% of total portfolio. That puts us in place right up there with the AAA brand new buildings. So we love what Vornado is doing. Plays right to our strengths. We're right there with a great product at even better pricing.
So is New York back? I mean, who's coming in? When we say these offices are being occupied, are they fully occupied, or is this a reality that companies might be signing up with themselves a little bit less space than they needed in the past as workers maybe work still a day from home? Because that there still has been a permanent shift, hasn't there?
You know, we really see a big return to office. Don't forget, in our portfolio, as we discussed last quarter, we're now up over 2.5 million square feet of space, leases done of tenants of ours who have expanded since we went public, and that has continued. So we're very pleased. Again, I do think that there are other properties out there which WeWork occupied or continues to occupy in some of these tech startups. These are not modernized. They're not in good shape. They're not competitive. If you take those out of the overall inventory numbers, the actual availability of what's really quality is greatly reduced. So that puts us, again, in a very positive position to receive the interest in service businesses, financial businesses. It's a very broad spectrum from which we draw.
Are you saying that this is more of a WeWork effect, that the vacancies reflect the demise of almost that company or that approach to work more than the actual trend, underlying demand for working in Manhattan?
So Midtown Manhattan is one of the strongest performing office markets in the recovery in the United States in the last quarter, according to the brokerage company statistics, number one. And number two, what I would say was the WeWork effect is they occupied a lot of really unimproved, poorly prepared office buildings. And the fact that those get vacated, they get added to the overall percentage of vacancy, they're not really in the market. They're not competitive. There is a return to market. There's there's a recognition that colleagues need to be together in order to perform and to improve. The studies are out there show productivity from people at home is greatly reduced, and we think that plays into the future. By the way, there will be some disruption from this increase in interest rates. Heads will go through the windshields. That also creates opportunity for us to work our magic. We know what it takes to improve, to lease. We know the rents we get, and we see opportunity there.
No, listen, I remember talking to you in the depths of the pandemic and feeling sort of uneasy about your fortunes, and it's kind of a relief and interesting to come out on the other side of this now and have this kind of conversation, and I have to give you a lot of credit.
Well, thank you. Empire State Realty Trust, office, observatory, retail, residential. Greatest way to play the greatest city on earth.
Well, it's certainly looking a lot more dynamic than we feared just a few short years ago. Anthony, thanks so much. It's good to see you again.